Welcome to Making Money with Matt McCall. It is Thursday, December 9th. Man, oh man, every time I say the date, we're getting closer and closer to the big day. Christmas, presents coming around. Well, I got some presents for you today. We're going to talk about Bitcoin and cryptocurrencies. But not just cryptocurrencies. We are going to talk about stocks that you could buy, cryptocurrency miners. With the pullback in Bitcoin, I see some great opportunity. A 6-pack of cryptocurrency stocks coming your way. Plus, we're going to talk about the market. The market itself right now is a little wild, but there's some great opportunities out there. All this and more coming up right now on Making Money. Again, welcome. This is Matt McCall. Thanks for joining me here today. It is Thursday. It's, as I mentioned, December 9th. Man, oh man, time flies when you're having fun, folks. But as I mentioned today, we're going to talk about some cryptocurrencies here in a minute. But I want to talk about the market here first. We've had a bit of a wild ride recently, especially with some of the tech stocks. Going back to Black Friday, Good Friday, Black Friday, and we had that abbreviated trading session. I was back then in Nicaragua. I just got back last night, so hopefully my tan is still golden brown for you all out there. But Black Friday, we had the report out of South Africa that Omicron, the new variant, was found. Of course, that sold off markets. It was a low volume day, half trading day, so it was ripe for a big sell-off. And boy, the timing couldn't have been better for people looking to get the news out there as everybody's home, traveling back to see family, and all of a sudden we have this new damn variant we're dealing with. That sold off the market. Then all of a sudden the news was, well, maybe it's not as bad as we thought. Then Pfizer and BioNTech said, well, I don't know if our vaccine's going to work. Then literally an hour or two later, the Pfizer CEO came out and said, it will work, but you need to get 3 or 4 shots. It's been a wild ride, and I don't think they know. I don't think the authorities that should know. So it means us as a layman out there, we don't know. We're taking what they say to heart. But I'm telling you, just like I say with the media when it comes to finance all the time, ask yourself why that person has that view. Why do you think the Pfizer CEO says we should get 3 shots, 4 shots, maybe every 6 months for the rest of our lives? That's a hell of a business model, folks. Have somebody you're coming in every 6 months. On the way into work today, I was listening to another financial radio station, and there was a guest on there that I found fascinating. I didn't catch his name because I caught the tail end of the interview, but he made a really good point. And I think this is something, I always want to be positive when I talk about things and apolitical. And this person was apolitical, and it was a bit positive what he was saying. He was saying that we're looking at the pandemic in the wrong way. Instead of looking at the increase in cases or decrease in cases in some instances, we should be looking at the severity of cases, the hospitalization of cases, not the exact number. Because I'm not a doctor, but it's pretty damn clear that COVID's not going anywhere anytime soon. The Spanish flu of 1918, by 1920 is basically not an issue anymore. But do you know the Spanish flu is still here? It turned into the seasonal flu. And if you read a lot of things about this, it looks like this will be very similar pattern. And I hope that's true, because the seasonal flu has been here for a long time and it's probably never going anywhere. So hopefully that's what we end up seeing here. The point that I'm trying to make talking about the pandemic is this has led to a lot of ups and downs in the market and specific stocks over just the last 3 weeks, folks. And I don't think that ends tomorrow or next week or next month. Again, I think this hangs around for quite some time. So as a long-term investor, we need to get accustomed to it, almost become numb to it. When, remember 9/11 when that happened? Obviously, it sold off the markets, one of the most horrific days in the history of this great country. But for months and maybe a year or so after that, anytime something was shut down, something happened in a New York subway or somewhere around the world, the market would initially sell off and get crushed, thinking that, God forbid, another attack was happening somewhere. Similar right now to COVID. Anytime a headline comes out, we sell first, ask questions later. When Omicron came out, nobody said it was deadly or hospitals were being filled up. They just said it was a new variant. And we're learning now that it's milder, is what most people are saying. We became numb to every time the police thought there might be a terrorist attack, we became numb to that. The markets didn't sell off. Numb as investors, not as people. Numb as investors. I think we'll see the same thing. Eventually, all this talk will go away and we'll concentrate on what's important. And that is investing in companies that are changing the world. Innovative companies that are growing as a size of the company, which then in result returns as a great investment opportunity. So we'll get there, folks. But along the way, it's going to be a wild ride. And I just want you to buckle up. Because if you panic sold on Black Friday and then Monday after that, you're probably chasing your tail trying to get back into the markets. Up 3 straight days heading into today, trading near an all-time high on all 3 major averages. And we are down a little bit today. And I'm about to show you the market here right now. Taking a look here at the S&P 500. As you can see, it's down about 0.25%, down about 10.8 points. But again, trading right here. That's an all-time high, right near an all-time high. After these 3 big days, again, folks, if you're selling into this massive panic right here, you're now chasing your tail several percent higher. Let's take a look at the NASDAQ. Down about 0.3%, but similar action. Look at this. You're selling down here and those tails, boom, bouncing back. And we have the Dow down about 0.2%. Again, the same exact pattern. And let me pull up here the Russell 2000 ETF. And, I talked about this breakout a few weeks ago, about a month ago, where it broke to a new all-time high. And then last week I talked about, look at this huge support, this line right here. You can see this dotted line. It held there and bounced. And again, we're down a little today. Nothing goes straight up. But right here, I got to tell you, folks, it looks pretty good. These small caps, these mid-cap companies, I think they will be one of the leaders in 2022. And so in the next couple episodes heading into the end of the year, what my plan is to start kind of sharing my view of 2022, my outlook. You start seeing this time of year, so many people coming out their outlooks. I love doing it. I like doing predictions, fun predictions. I don't have a crystal ball, but I think it's fun to share ideas. It opens up the mind. It makes us think outside the box, gives us ideas to make money that the average people are not looking at, that Wall Street's not looking at. So before I get into my 6-pack of crypto stocks, though, let's talk a little bit about a number that came out today. The weekly jobless claims, which comes out every Thursday, came out this morning. The number was 184,000 people filed jobless claims. It's for the week ended December 4th. Folks, do you realize this is the lowest number we've ever seen in a week, going back to September 6th of 1969. I wasn't even a thought process in my parents' mind. They were actually still in high school, if not middle school at that point. So just think about this. That long ago, and I'm not that young, the lowest total. What does that tell you, folks? Well, let's add in the unemployment rate of 4.2%. That's basically full employment. Well, that tells me one thing. And I showed a chart on Twitter the other day about the amount of job openings out there. Folks, there are jobs out there. And again, people get mad when I say that because people, not everybody's a job. And yes, not everybody will have a job at all times or the job that they want or not getting paid enough. I get that. I'm not putting anybody down. But this shows to me how strong the economy really is when we need more workers to make things and produce services. When the services sector and the goods producing sector are begging for people to come in and work because they have demand for their goods and services, that is a strong economy. I don't care about inflation when it comes to that. Sure, inflation stinks. Things cost more. But again, folks, if there's a demand for people to come and work, it's because there's a demand for goods and services. And that is a good thing, even with the supply chain still being a little screwed up. Keep that in mind. So when you go to your holiday parties and your Christmas parties, and people say, man, this economy sucks. Tell them no. Then why can't we find people to work? Why are the unemployment claims at the lowest level since 1969? If things are so bad, folks. And that is why the stock market is a couple ticks from an all-time high. It's pretty damn simple. It's why it's there. Speaking of inflation, tomorrow we have the CPI report coming out. The estimate is for 6.7%. That'd be the highest level going back to the summer of 1982. That's when I was 6 years old. I don't know what I was doing then, but going back to 1982. I mean, these are numbers, these are years that are way the hell back. I just want to mention one thing on inflation because I feel like we're all torn. Some people think it's the worst thing ever. Some people think it's nothing. Some people think it's transitory, meaning it's going to be here for a little bit and then go away. I had a conversation last night. I landed last night from Nicaragua, coming back. I'm in the backseat of an Uber. A very chatty, very nice young gentleman. And we were talking about televisions. I'm not sure how we got on this topic. But he's like, I just bought a 55-inch TV for like $300. He's like, I remember back in like early 2000s being at Costco, I think, or somewhere with his parents. And they had just come out like this big advertisement for like a 27-inch plasma TV. And it was nearly $3,000. So we have inflation in certain areas, but technology and innovation oftentimes can erase inflation. Because that TV now, you can get a beautiful TV for a few $100. 20 years ago was a few $1,000s. The technology is so much better than it was 20 years ago. The TVs last much longer than they did years ago. Your tube doesn't blow out. I remember those with the huge back tubes. I had one maybe not too long ago, 10 years ago, and I remember I couldn't give the damn thing away. It also weighed about 80 pounds. I remember I couldn't find somewhere to get rid of it. You had to call like the local town to get rid of it because nobody knew what to do with the damn tubes because they want to recycle it or do something of it. But think about that. There's so many things that the prices are dropping on, and a lot of things that we buy. Sure, rent's going up, used cars, new cars are going up, housing prices are going up, food prices, material prices. So there's a lot that's going up, but please keep in mind that technology and innovation will help flatten out inflation over time. All right, so we talked about the markets. We talked about the inflation number tomorrow. We'll see how that comes in. 6.7% is what they're looking for. We talked about the pandemic a little bit and kind of, where I stand on that. Again, folks, I'm not a doctor. I'm not giving you my thoughts on what you should do or anything. My only thing is when I see headlines that are literally right next to each other about the same company and they're saying one thing or the other, it's going to move markets, and we cannot use that as an excuse to buy or sell. It's going to spook people. We need to stick with our long-term themes, stick with our long-term strategy, buy into solid companies that, regardless of the pandemic, will continue to grow over the next 3-5+ years going forward. I do want to show you a chart before I talk about my Bitcoin stocks here. So I posted this on Twitter yesterday. I think this is pretty fascinating. And this is over the last year, so last 12 months. And this is a percentage gain. This purple line, you see how inflation's gone up a lot. It's gone from like 2% or less than 2% to like 6.5% or wherever it's at. So you can see that's why it's up 356% in the last 12 months. And then we have Bitcoin over that time frame. Even though we've had a pullback, it was up about 260%. It's still up 176% over the last 12 months. That's what people sometimes ignore. They just look at the last few months. Oh my God, Bitcoin's down. Still up 176%. And then there's this little ugly ass gold colored line down 4.5%. Oh, that's the price of GLD, which tracks the gold market. So for all the people out there that continue to bash me and say gold is the place to be, it's the best hedge against inflation, am I missing something? How is it the best hedge against inflation? The last 12 months should be the time where gold outperforms. It should be the time when the gold bugs are dancing in the streets. They're dancing, but they must be high on something because they're looking at the wrong charts. This is ridiculous. This is why I own Bitcoin, and this is why I do not own gold, folks. And I know it pisses people off. We shouldn't take it personal. If somebody tells me Bitcoin sucks and it's going to zero, I don't get angry at you. You're entitled to your opinion. But it's funny how gold people get so worked up. But a reason I think they get so worked up, though, to be honest with you, is because it sucks and they're losing money. If they're making money like I'm in Bitcoin, it doesn't matter. You can say whatever you want. But when it's lagging and not doing what it's doing, it's like saying your kid's bad at sports, but if he really is good, who cares? That's just some joker. But if your kid really does stink at sports, it hurts. It's probably a really bad analogy because I don't have kids, but you get the point. Your kid that you call gold sucks at sports. All right. So let's go back here and we're going to take a look at some of the stocks. So let's take a look at stock number one. And again, this is a 6-pack of crypto miners. So this is Marathon Digital Holdings, symbol MARA. Pretty interesting company, $4.4 billion company. So one of the bigger, if not the biggest crypto miner out there. And wait till you hear these growth numbers. It's quite fascinating. In 2020, so last year, it had revenue about $4.35 million. This year, they're looking for $186 million. By 2023, again, that sounds so far away, but in 3 weeks or so, it's going to be 2022. So 2023 is not a far away, especially as an investor. You need to be looking out, not looking in the rearview mirror. 2023 estimated $913 million in sales. They lost 13 cents last year. This year, looking for a profit of $1.43. Again, by 2023, a profit of $5.37 a share. At $5.37 a share, this stock should be trading at 30 times earnings, in my opinion, minimum. And again, that's in the next, 2 years? 30 times $5.37, you're looking at a stock that's about $155 a share. Right now, it's a $42.24 a share, pulled way back from the high of 83 that it hit just a month ago. I will say this, all these stocks I'm about to share with you, they trade very similar to the chart of Bitcoin. And let me pull up the chart of Bitcoin here for you, because I think it's important just to kind of see, the price of Bitcoin US dollars. And it's down right now. It's at 48,300 or so. So it's trading right around here. And you can see it's very similar charts, pull back from the high, very similar to Marathon Digital. So let's take a look at another one. Number 2, it's Riot Blockchain. It's about a $3.1 billion company. Again, amazing growth. $12 million in revenue last year. This year, looking for $219. By 2023, $657 million. Lost 30 cents last year, looking for $1.17 this year. And again, by 2023, $2.77 per share. Now, folks, that's only the first two. Those are the two bigger ones. But my point, what I'm trying to get across here is huge growth. And that's because this is a mega trend. One of my mega trends is crypto, Bitcoin, blockchain. And when you have a mega trend, you're going to see huge growth on both the top line, which is revenue, sales, and on the bottom line, which is earnings. And I always say we have to have what we call a path to profitability. Amazon back in the day, its revenue was booming. And everybody would go on to financial media and say, Jeff Bezos is nuts. He doesn't know what he's doing. He can't make a profit. And then all of a sudden, they figured it out. But he didn't figure it out. He had a plan the entire time. Revenue came in, he reinvested in the company, and eventually you turn a profit. And that's what I call in my strategy a path to profitability. The companies I'm talking about here, some lost some money last year, but they already have that path to profitability. And when I talk about profitability, I just mentioned for Riot, by 2023, $2.77 a share. That's a major profit. And these companies should trade off that. Riot's around $27 right now. Again, if it trades at 30 times its earnings, it's a three-bagger from here by 2023. Again, the wild card for this, and the next four I'm going to talk about as well, is the price of Bitcoin and cryptocurrencies, because that's what they're mining. So if the price of what they're mining goes down, it's very similar, folks, to gold, silver. You can get that gold and silver out of the ground at a cheap price, but if the price keeps going lower and lower, the value of what you hold will go down. So keep that in mind. They trade very similar to that. But all that being said, if you believe Bitcoin will be higher in 3 months, 3 years from now, these stocks will be much higher along the way. Volatile, but much higher along the way. The third one I'm going to talk about, not a miner, but it is such a major company that I feel it's really something we have to look at. And this is Coinbase, and the symbol is COIN, COIN. Down today, most of the stocks here are down today. It's at $276 a share right now. But again, look at this chart, how it was doing well and then had that sell-off, and then we bounced back. But again, a lot of tech stocks are getting hit a little today. Nothing to worry about in the short term. Still great support right here around this 275 level. And, this is a big one. This is a big guy. It's a $60 billion company. It is the largest cryptocurrency exchange out there by value. It had revenue 2019. Just want to throw numbers out and go back a year. 2019 revenue of $533 million. Last year, $1.28 billion, so it more than doubled. This year, shooting up to $7.37 billion. Amazing. And then it kind of flattens out. By 2023, it only increased a little bit more, just over 8 billion. Again, big jump this year in earnings. Last year made $1.57. This year estimates $13.89 a share, but then it actually dips down. 2023, 8.84, so $8.84 a share. But again, trading where it's at, I think this is a leader. Even though it is more expensive at $60 billion market cap, if cryptocurrencies, as I believe, become a true asset class, and I think they are an asset class already, the value of cryptocurrencies is well above $1 trillion. So I think we have a true asset class, folks. It's worth a couple $1 trillion, the entire cryptocurrency market. And I don't think that trend ends anytime soon. I think it could be worth the high single digits in trillions soon, which means the entire market triples from here, if not more. It could quadruple from here in the next 3 to 5 years. If that happens, this company could be a $250 billion company, 4x from here. Because as a leader, as a first to market type company, doing the right things, already profitable, I think this is a leader going forward. And they keep adding more coins and tokens you could buy on there. It's so easy to set up an account. It's literally, I helped somebody set one up 2 weeks ago. It is so easy. Anybody can do it. So this is, they have a bit of an edge when it comes to that. So Coinbase, to me, one to keep an eye on, even though it is already a $60 billion company. So let's go back now to some of the miners. This is Hut 8 Mining, a little bit smaller company, $1.54 billion company. As you can see, again, at an all-time high here in early November, pulled back quite a bit. It fell about over 50%, as a matter of fact. It's now, again, down a little bit today. Actually down about 6% today, $9.29 a share. Symbol's HUT. Last year, 30 million in sales. This year, $142 million. And by 2023, 600 million. Last year made 15 cents a share. By 2023, making $1.77 a share. But again, folks, at $1.77, if it trades at 30 times, it's, that's what, $50 a share, in the early and low 50s for a $9 stock. Again, you're going to have volatility because if you bought a month ago, you're down 45% right now. And that hurts and that sucks and that doesn't feel good. And you might have panicked sold last week. But that's why you want to buy on these pullbacks. I don't know if the stock drops to 7. It could. I truly don't know. But folks, when it comes to long-term investing, you have to think big picture. I love looking at the charts because it shows the real action in something. The chart takes all the buys and sells and puts it on one very easy to read chart for you. And I view it much better than I would a bunch of script numbers. I like looking at charts. I've been reading charts for 20 years now. I wrote a book on how to read charts 13 years ago. Wow, makes me feel old. So I love this. And I'm not a trader. I don't use this to trade, but I'll use these charts as a great way to know when to get into long-term stocks. Because when it pulls back like this on long-term support, that gives you a much better what we call reward to risk ratio. Meaning that your reward's higher because you're buying at a lower price. So if you go from, let's say, 15 to 10, and let's just say the goal is 20. From 15 to 20, it's a 33% gain. From 10 to 20, it's a 100% gain. So it increases your reward potential. Also, on the downside, your risk is less because 15 to 0 is more than 10 to 0. And hopefully it doesn't go to 0, but if you have a stop loss in there, maybe 50%, whatever it might be. But typically your downside is going to be lower if you're buying closer to a support level. So you're increasing your reward, lowering your risk. So that ratio goes in your favor very much in a positive way. And that to me is very important and often overlooked, and why you want to buy stocks when they're pulling back. Nothing with buying stocks that break out and pull back a little bit, but if you have a nice pullback in a stock that you've been looking at for a long time, boy, oh boy, I never know, the pullback could continue. But again, if I'm looking out a year, 3 year, 5 year more, that's what I'm saying. Okay, do I think Coinbase will be higher 3 to 5 years from now? I do. But could it pull back 20 more percent? Absolutely. And that's how you have to look at the long term, folks. This one is Bitfarms, symbols BITF. Again, all the charts look the same. What I like about this, though, it had resistance around 7.25, broke out, trading around $6 right now. So it's down about 7.5% today. Everything's down because Bitcoin's down today. Bitfarms, as I mentioned, $1.1 billion company. Last year, $34 in revenue. By 2022, looking for 244 in revenue, lost 19 cents a share last year. This year, first profit. By 2022, just 1 year from now, 40 cents a share in profit is what the estimate is. So, a little bit smaller company, so the number's not as big, but its ratio is right there. And the last one we'll take a look at is Hive Blockchain, HIVE. Again, very similar chart, folks, pulling back from the highs in November. This is about a $1.1 billion company as well. Not a lot of estimates out there for this, but last year, 29 million in sales. This year, looking for 100 million in sales. So again, you're just seeing how these companies, the crypto-related companies, are growing. And to me, that is a trend we cannot ignore, folks. It's very, I shouldn't say it's difficult. It's not easy to find a lot of growth like we're seeing here, these annual growth percentages. But I got to tell you, it's you can't ignore this. And regardless of what you feel about cryptos or Bitcoin, if you don't want to actually go and buy them, I think this is a great way to do it. You gain some exposure to the industry, buying it just like a stock. You can buy in your IRAs, your brokerage accounts, just like you do everywhere else. Obviously you're not paying commissions anymore, so you could buy this with nothing. You don't have to pay, Coinbase, it could be a little expensive to buy a crypto on there because it still is really early stages. So that's why they make a lot of money. They charge high commissions to buy the cryptos. But for this, you can do it. I mean, you could buy these stocks just as you do in any other account. They all trade on major exchanges. None of these are over the counter. They trade on either NASDAQ or New York Stock Exchange. Very, very easy to buy, folks. So I hope that helped you out a lot. I was going to do the mailbag today, but we'll come back to the mailbag next week. It's a lot of the same stuff. People bashing me. I'm sure I'm going to get a lot of bashes because of gold here. But if you don't mind, comment down below on YouTube, because we love to see the comments, good or bad. We want to make the show as good as possible for you. We're doing this for you. And again, what are the three things, folks? I'm always going to hammer this in your head that we're here for. We're here to educate you. We're here to have fun. And that always results in the third thing, and that's making money. If we could do those three things, I will be the most successful, the happiest guy in this industry ever. And that is my goal, to create the followers, create the community, so we can continue to help you achieve that. Because it's one thing to share stock ideas with you, but if I can educate you as to why we're doing that, next thing you know, you're coming up with your own ideas. Next thing you know, you're coming up with your own strategy. Because not everybody's the same. You don't always want to do what I do. And boy, oh boy, if we can have fun, heck, that's what life's about, right? It's about having fun. If we can have fun along the way doing it, let's do it, folks. So again, I'm Matt McCall. Thank you so much for watching. We'll be back next Tuesday. And this has been Making Money.